Bitcoin just triggered two bullish signals from our previous video last week, which could be signaling that the bulls are back and your favorite altcoins are about to go on a monumental run. The caveat here, guys, is that the US stock market is also setting up in a similar pattern that we've seen before that led to a big decline, which could definitely have an effect on crypto. So let's take a look at the charts and see what we're looking at and see how we can best position ourselves to make money this week. All right, guys, welcome back to the channel. In case you didn't know, this is my second YouTube channel dedicated to trading only. I have another 450,000 sub YouTube channel that I'm now doing with my podcast. But if you could help me grow this channel, that would be great. I have a quick favor to ask of you. Go down and look at how many likes this video has right now. And if it doesn't say 500 likes yet, please, if you could, hit the like button. Let's get back to the charts. All right, guys, let's start off with the top-down analysis, because everything is correlated whether you like it or not. US stocks is typically the market leader. There has never been a crypto bull run without a stock bull run. And so we're going to talk about the NASDAQ first, because I just opened a short position on the NASDAQ today. That doesn't mean that NASDAQ is going to completely crash here, but it's set up in a similar pattern that we have seen before that I made money on in a similar way. So let's just take a look at what we're doing right now with the NASDAQ and why I just shorted based on what we've seen in the past. If we look at this past big run that we saw on the NASDAQ, we saw a nice big pullback of about 8%. And then after that dip, that basically was the same exact pattern as last time. We saw a dip under the lows here, which created a sell side liquidity trap that we can see here that then created a big bounce to the upside. Okay. And what happened after that bounce, it basically retraced right into the 78.6% Fibonacci retracement before seeing new lows, and then one more spike into the actual trend line, and then new lows again. So we're setting up in this same exact pattern right now that we saw previously on the NASDAQ. We also saw that once degenerate shift started going bearish after, an 8% plus drawdown, once that started going bearish to the downside, that led to multiple spikes to the downside as well. Whereas, when we're in a straight bull market like these bull runs, we don't really see those dips. It just rides above there. But once we saw the dip below the zero threshold, that's when we started seeing a shift in trading for the next, 2-3 months that you can take advantage of some volatility within that. Now, there was that nice big spike to the upside, and then the pullback, and then another big spike again, faking everyone out, thinking, okay, we broke up this high, bulls are back, let's go. Wrong, 78.6% fib retracement, and then new lows incoming. So that's what happened last cycle that we saw. Now let's take a look at the current cycle again that we have right now. Okay, big bull run, breakdown to the downside, which then created a trap, just like we saw here off these lows, right? Sell side liquidity trap, of which we longed in the Wolfpack in our Discord, made money on this push to the upside, and I was looking for a short on this move right here, but it didn't quite get to where I wanted it to be. Then we saw a big dip to the downside and then break these highs, and now we're back right into currently the 78.6 Fibonacci retracement, just like we saw on this previous move right here before the next leg down actually happened. We also saw that it wasn't a good idea to short this top right here. Why? Because fear and greed was not greedy yet. It wasn't in an overbought territory. We had to wait for that secondary dip and then a push up into also the descending trend, also the 78.6 fib level. Also, fear and greed was now in overbought territory. Now we're in the same exact situation. Price has driven up into 78.6% Fibonacci level into the bearish trend, as well as fear and greed is now in a overbought territory, leading to the idea that this could be an area to short. It does not mean that this is going to happen. It just means that there's a higher probability of this happening, and you can set up a trade plan, of which I have here, to get short at this level with a stop if we start pushing above these highs over here, and then take advantage if we drop. But it might only drop right into, the degenerate trend or retest this area of now support before coming back up and then actually going and breaking all-time highs. Okay, so I'm not counting that out. That is why you use a stop loss in place. All we're doing as traders is looking for higher probability of setups based on we saw how the entire neural network of traders reacted under a similar situation. So we have that similar situation here on the NASDAQ. So I set up a short, just 0.25% risk. I'll add again if we get one more little spike above the 78.6 fib level. But if we start holding above that and break above this trend, that could mean the bulls are back in play. earnings have been out this last week, which have actually been better than expected, which is why we've seen such a big spike to the upside on NASDAQ. But I'm just trading the chart and understand here's how people typically react under a certain scenario. And so I'm taking a small bet to see if that actually plays out again. And if this does play out again, that's obviously going to be negative towards crypto, negative towards the sentiment that crypto is going to keep going up, at least in the near term, right? If we look back again at this, yes, it made new lows, then new lows, and then new lows again, but then the bulls were back in play and the trend continued up. A lot of people mistake my analysis for the end all be all. I'm a short-term swing trader. All I'm looking for is windows of opportunity in these swings that happen for 14 to 45 days. I get in and get out. So when I say that we're going to see new lows here, that doesn't mean the bear market is here and we're dropping to the lowest we've ever been in the history of the stock market. This is just the short-term reaction that we're looking at based on the chart. Everyone thinks I'm a perma bear or whatever, but all I'm looking at is what might happen in the next 14 to 45 days to take advantage of. What happens beyond that is anybody's guess. I'm not a macroeconomist. Brief interruption here, guys. Did you know that 75% of traders have accounts under $25,000? This creates a huge problem because even if you double that account in a year, which is almost impossible, you're still only making $25,000. Introducing Hydra funding, where you can potentially get access up to $500,000 in capital. All you have to do, guys, is sign up for a challenge account, which is going to give you potentially access up to $500,000. And if you earn a 10% profit in this demo account without going into a 5% loss overall or a 4% loss in a day, you will then pass their evaluation phase and, yes, get access to an account with the selected size account. And now, instead of trying to double a $10,000 account, you could potentially earn only 10% on a $100,000 account to earn the same level of profits. And the benefits of this are huge. Rather than risking your entire $10,000 on one account, you can use just $1,000 to potentially get access to $100,000 in capital. You can trade crypto, forex, stocks, CFTs, gold, oil, everything under the sun, all on MT4 and MT5. If you're interested, if you have an account under $25,000, like 75% of traders out there, you're not going to make any money with that account because it's too small. Get access to pro level funding and pro level capital with Hydra funding. Link's going to be below. I don't even know what the word for that is. But I'm just looking at short-term opportunities that we can take advantage of as traders. Get in, get out, profit, reset, look for the new setup that happens after that cycle after that cycle completes. So again, looking after that cycle, if it did complete, if we got back down to these levels about 16.7, similar to how we saw here, there would then be a buy opportunity, then another potential shorting opportunity for another new leg low, depending on if price stays within this actual descending trend that's actually in place right now. So now that we see kind of what the situation is here on the NASDAQ, let's take a look at how that might affect Bitcoin as of right now. Now, in last week's video, we talked about how I was short, took advantage of this dip to the downside, and price had yet to actually break out above this level at 60K, which would then create a bear trap, which would be a bullish signal for the bulls. And then if we broke above this line right here, that would also be a bullish signal for the bulls, that we might see a continuation to the upside for crypto. And on top of that, while this was in play, this all was triggered by the NFP non-farm payroll unemployment rates that came out last week. It happened very, very quickly. You really didn't even have a chance to get in unless you were already in prior to the news coming out, which for me, NFP is typically a no trade day because, you know, sometimes I might have a swing already open, but the problem with NFP Fridays is it's going to spike in a massive direction very, very quickly. And a lot of times, in this case, the spike of the direction was actually the continuation. But a lot of times, whatever way it spikes first is actually opposite of where it ends up on the day. So it's a very difficult trading day to have any sort of exposure. I try to avoid it if I can, but sometimes I'm in the middle of a swing and I just kind of have to go with the flow. In this case, I had locked in my profits on my shorts prior to NFP because we got in up here and then rode this all the way down. Locked in gains in this area, got stopped out right around here just before NFP. So as of right now, Bitcoin's chart is in fact actually again in a short-term bullish area because we had two buy signals. We had the trap here at about 60K. That was a buy signal. We're now sustaining prices above that level. As of right now, we also broke above this level right here. Now, but there is the problem here that yes, it did break out above that level, but we're still flagging under here, which is in fact a bullish consolidation. But the US stock market just went on a huge run. It's now overbought, and it's in a similar pattern that led to new lows in the near term in this previous setup. And if that happens, if this scenario does play out, that could potentially mean that this is a fake out on Bitcoin, and we might actually see something like this and actually come back down and retest this level of about 52K, potentially even lower. So as of right now, I don't have any positions open in crypto. I'm just short a very small position in the NASDAQ because that pattern is a little bit more reliable in the sense of I can create a much more comfortable trading plan based on the pattern. Right now, the pattern on Bitcoin is a little uncertain. So right now, I don't have any exposure into crypto. Now, if we look again at the previous cycle on crypto here, guys, we did see a big, healthy pullback on Bitcoin of about 55%, okay? Before we actually saw the reversal and then the secondary leg, okay? And we saw quite a bit of sideways price action before we actually saw the next leg up. So let's see, you know, from the actually 50-day moving average breakdown, let's see how long that took. So from the 50-day moving average breakdown that led to the 50-day or the 55% drawdown on Bitcoin, it took about 95 days or so before it finally just consolidated and then broke the 50-day moving average. And literally pretty much as soon as it broke again above the 50-day moving average, that was when the next bull cycle started after a 55% drop. If we look to see where we're at now in this cycle on Bitcoin, it broke the 50-day moving average right here, and we're only 25 days in from that actually happening. So due to the fact that a lot of times our analysis can be correct sometimes, but we're often early because we don't let the charts actually play out. So comparable to last time, we're only down, let's see, from the top, we made a low of about 22% versus 55% pullback on Bitcoin last time. And we're also only 24 days in or 25 days in from the 50-day moving average breakdown, whereas last time it took 95 days before consolidation to really settle in and then see a next cycle move up. So I think it's a little early to jump the gun and suggest that the bull run is back and we're going to start pumping to the upside. I think always patience does pay off in a lot of situations to not go balls deep early into any sort of market and have some sort of, you know, hesitancy, at least if you're just not go all in. But if you want to be in now, I do think we could definitely see some potential new highs incoming in this year, but it doesn't mean that we might not see a pullback potentially into the 40,000s before that happens. There's typically always one big fuck you or one last big fuck you before we see the next leg up. And we kind of did see that. Some altcoins are down 70% plus, definitely liquidated a lot of people, but Bitcoin really isn't that down, really isn't down a whole lot comparable to the last cycle that we saw. So as of right now, I'm just kind of sitting on the sidelines and waiting. Obviously, I'm a little bit biased to the bearish side because I did just open a short on the NASDAQ, but if we just sustain prices and flag up here and break out above this bearish trend, break out above 78.6% on the fib levels, that could potentially mean that we're getting ready to just continue this trend higher, which would then potentially mean that Bitcoin and Ethereum are getting ready to break out to all-time highs coming up soon. If we look at the NASDAQ right here, we're just sideways channeling. And now we had a small bear trap right here, but we also have a descending triangle breakout or breakdown pattern, which is time will tell which way this actually goes. Right now, I would say based on the fact that stocks just made a huge pump to the upside and there's a lot of downside, if that happens, I would be more leaning towards something like this potentially happening, coming back down to about 2,500 on Ethereum. But if we just consolidate in here and break out above this line, as well as get back above the 50-day moving average and just break it back above 50 or 3,000 here, that is going to be a very, very bullish signal before we see the next leg up to retest all-time highs again. So if we look at what happened on Ethereum in the last cycle, guys, we saw somewhat of a similar descending triangle breakdown, right? That actually broke out to the upside, okay? Which there was a lot of fear in the air when this was forming up. But once it broke out above that descending trend line, that was the secondary leg. And this is where I actually made a shitload of money on this secondary run up for altcoins. So this is kind of what everyone is banking on. It's almost like I see it a little too much. I have friends or people I'm working with, or I see people on Twitter, but they're just like, they're not concerned about any more downside. They're like, yeah, but the second bull run's coming, so we're going to be okay. And I'm just like, do you know that? They don't. Nobody knows that. But the fact that a lot of uneducated people are just relying so heavily on, yeah, but the second bull run's coming. So we haven't even seen alt season. So that right there gives me a little bit of a negative sentiment that the second one is coming anytime soon, that we might need some more time for a chart pattern to play out before it would actually come into fruition. And those people who are saying things like that now need to get stopped out and lose more money before we see the next leg up. So anyways, I'm remaining cautious of what's happening here. But as of right now, you know, we are in that similar descending triangle pattern that we saw last time in Ethereum. If the US stock market does dump, of which I am short at the moment, I think we could definitely potentially see one last dump to the downside. But if we break out above this line right here, that's going to be very bullish for altcoins, and that could signal the next run up for altcoins. Okay, so either way, this line right here is going to be in play if we go up or down, right? If we go down to the downside, this line is still going to be there. Okay, we could come up and retest this, break down here, come all the way down to 2,500 or even down to 2,300. But this line right here is still in play. We could come back up, retest the breakout or the breakdown, which is now going to be resistance, as well as the descending resistance. And if we break out above that, that's going to be a much better buying opportunity than just hoping it breaks out right now. I would rather see it dip down here, retest this level right here, which would now be confluence. And then if we see a double breakout of both horizontal and descending, that is going to be a huge buy signal, of which that could be the area where we really see some big runs on across in the altcoins and we make a shitload of money. Anyways, guys, again, thank you for tuning in to today's video. There isn't a whole lot of big economic news out today as far as the US goes. It's mostly just English, UK, some data out of China. No US big news coming out other than consumer sentiment on Friday. But take a look at the likes on this video. If it doesn't have 500 likes yet, please, if you could just like this video and support this channel, that would be amazing and greatly appreciated. Anyways, see you guys in the next one. Peace.